Hi. Well, here we are. This is the first time David and I have attempted a live stream. We've been threatening to do it for some time, but we've kind of been putting it off. Well, here we are. This is the first time David and I have attempted a live stream. We've been threatening to do it for some time, but we've kind of been putting it off. Well, here we are. This is the first time David and Hi. This is our first attempt at live stream, so please bear with us while we try and sort ourselves out here, because we're not, as I said, this is the first time that we have done it, and we're linking it to our Zoom account because obviously we want to share our screen with you. So please bear with us, and hopefully you can hear us. You can hear me. If you can hear me, could you just let me know by putting a yes in the comment section? Thank you. Okay, chat. No, I think we have to go on to YouTube. This is not working. Right, apologies. Please bear with us. We will get to the topic of this live stream, which is obviously volume price analysis. Thank you so much for your patience and for your understanding. And as soon as I'm sure that everything is working fine, we will get to the topic of this live stream, which is right. I've actually muted myself on the YouTube. Yes. So I've got it running and I'm actually going to use the Zoom. All right.
Yep.
Have you got the YouTube down there? That should be running.
I can't listen to it because I get it in my head.
No, I've turned it off. I've muted it.
I've turned it off as well.
Right. On the YouTube, if you pull up the YouTube, where you saw us, where you saw the comments.
Yeah.
Yeah, if you pull that up,
Hold on.
what you showed me a minute ago.
Ah, there we go.
Right, on the side there. Right. Right. Can they all still hear me?
Yes. Apparently.
Perfect. I think I've cracked it. Now, what I'm going to do before we start is I'm quickly going to share my screen because I want to make sure that you can see my screen as well. Okay.
Okay. Share your screen. Share your screen.
No. Right.
Just wait for a minute. Perfect.
Yay. Fantastic. Everyone can see the screen.
Yes.
Perfect. Right. I think we can start now. Let's start again. Thank you so much for taking the time to come and join David and myself. Obviously, David is sitting next to me. And the purpose of these live streams, we're going to be doing them more regularly, is to cover the topic of volume price analysis and how we can apply it to the market and different instruments. I mean, we've kept the title very sort of general today, but what we are going to be focusing on is we're going to look at the indices, and if we've got time, we can also look at some stocks. We will cover Forex, but I think we will do a separate live stream specifically for Forex. But for those of you who already know us and are aware of the books that are up on Amazon, will know that you can apply volume price analysis to any market. If you have a chart and it's got price action and it's got volume on it, then you can use volume price analysis as your as a technique for analyzing basically what is going on, but much more importantly, what is likely to be happening next. And if you really want a sort of summary of what is volume price analysis, it's the study of the relationship between the price action and the volume, and the volume helps to validate the price action. In other words, what we're seeing on the screen, on the chart, is it genuine? Is it a genuine move? Is it a trap move? Is manipulation going on at that particular time that you are analyzing the chart? Now, because it's a live stream rather than just a recorded webinar, if you've got any questions about VPA, or you want us to have a look at something in particular, David and I will be more than happy to do so. As I said, this is the first one. I want to, for myself personally, I want to have a look at the NASDAQ, the NDX. I'll also have a look at the NQ, because the recent market sell-off has really been led by the tech sector, and there's all sorts of reasons for it. I'm not going to focus too much on the drivers for the sell-off, as it were, because I really want to spend more time on the charts, really highlighting the signals that are there at the moment, to try and help you understand, first of all, what to look out for when we have a potential reversal. And at the moment, those of you who have been trading, certainly on the indices, will know that there's been a very sharp sell-off. The sell-off has been going on for some time, but there's been a bit of a relief rally. And the reasons why the relief rallies that we saw yesterday and the day before haven't really played out in the way that most people were expecting. And if you use VPA, the clues are there. If you want to know a little bit more about the background to the market sentiment and market drivers, can I suggest you perhaps follow me on Twitter, or X as it's known now, because I do spend a lot of time, putting out the kind of education, the kind of information that I think will help you, whether as a trader or an investor. And just to give you a roundup of it, and it's really all tied up to what is happening with what's known as the yen carry trade with the Bank of Japan. And obviously last Friday, we had the employment data that came in, certainly worse than expected. And there's all this argument and narrative about, is the Fed going to cut interest rates? Is it not going to cut interest rates? Is it too late? Have they left it too late? Just as they left it too late to raise interest rates. And that is all impacting the market narrative and the market sentiment. But the one aspect that perhaps a lot of people have difficulty getting their head around is, what do we mean by the yen carry trade, and why the Bank of Japan has such a huge influence on the global financial markets. And we are in a very, very delicate situation at the moment. Are they going to precipitate a major crash? I don't know, because we have an election coming up in the United States. Obviously, no administration wants to go into an election with a market crash and the economy crashing. So if you like, the central banks, particularly the Fed and the BOJ and other central, they will do everything in their power to keep things going, at least until this very major event is out of the way. And of course, the issues around the politics at the moment, they're a separate issue anyway. So if you want to understand a little bit more about the carry trade and why the Bank of Japan and what has been happening in the last couple of days, if you send me a message on Twitter, I can send you some of the links that I've shared with my followers, because it really does explain it in a very straightforward, and once you understand that, it's something that you have to just keep an eye on, because these things can be, the can could be kicked down the road and it can be postponed, but at some point there is going to be a reckoning with what has been happening, as I said, with the carry trade. Right, that's what I want to say. I'm going to pass over to David. As I said, I'm going to be focusing on the tech sector, specifically the NDX. On my screen here, I'm using TradingView. I've some charts I'm going to strip off a lot of the indicators, really to get back to the basics of VPA. I've got 3 time frames. I've got the 5-minute chart, I've got the hourly chart, and I've got the daily chart. And I've just walked you through really what to look for across the time frames for a view of, what kind of market environment are you facing on a day-to-day basis? That's the first question you have to answer when you come to your screens. Obviously, look back and see what's happening. And then I'm going to look at the 5-minute chart together with the hourly chart, just for things like support and resistance. And as we go through the session, just keep the questions coming. And as I said, David and I will be more than happy to answer them for you. So I'm just going to pass over to David.
Hi, everybody. Apologies. As I explained in the chat box, we are, I wouldn't say we are technophobes because we're not. But unfortunately, whenever we try new platforms or new ways to present things, it does give us a few challenges. So apologies, bear with us. We will get better at it. And as I said to Anna before we came on air, I'm sure the first time we did go to webinar, it was equally clunky. And we've done hundreds of webinars. So we're just getting used to live stream. And I think the thing that is perhaps the most difficult for us to manage is the fact that everything is a little bit delayed. So when I'm speaking live to you now, but you are probably listening to me 10, 15 seconds ago, and the same with Anna. So where we have things turned on, you get this awful echo and delay. So it's just a question of managing what we have switched on elsewhere and just turning it off so that all we've got is just the one volume. And I can hear a bit of echo on yours. You've got yours turned up. Okay. Okay. I've got two very simple workspaces. I've got we're on TradingView, and I've got the NQ on one with multiple time frames. I've got 30 seconds, I've got 1 minute, I've got 3 minute, and I've got 5 minute down here at the bottom. And this is a very, very simple workspace. I've got no other indicators on here other than the volatility indicator, which is this one. And obviously I've got volume. And then I've got a second one here where I've got NVIDIA. We're coming towards the end of the US session. So for us, we've got roughly another, half an hour to run. Always interesting to see in the last 30 minutes, because invariably you will see a surge in volume, often in the last half hour, as a lot of these contracts are closed out. And I think the one defining factor that has changed beyond all recognition in the last few years is the influence now of the options market, which is absolutely enormous. And it is almost a case of the tail wagging the dog now, with the options market almost driving the stock market. And if you're not familiar, or at least have a basic understanding of the options market, how it's created, how it's managed by the market makers, the impact of zero DTE options, and everything that goes along with that. And a lot of this, of course, has come out of COVID, which primarily is when much of this changed. But the volumes that are now driven through options are monster. They are 10 times the volumes that were passing through that market 5, 6, 7 years ago. And it is now a major contributor to the direction of stocks in the market. So having an understanding of the options world is essential now. It is, whereas 10 years ago, 15 years ago, options was, I wouldn't say a backwater, but it was certainly a market that was played by relatively few players. Now it is mainstream and very much, as I say, driving the market. So let me just start. Let's just go over onto the NQ. And sorry, just on this workspace, what I've got set up here on the top line, as I say, this is NVIDIA. I've got 1 minute, I've got 3 minute, and I've got 5 minute. And down at the bottom here, I've got the same time frame. So I've got 1, 3, and 5. Just correct that. Sorry, that should be 1 minute. Let's change that to 1 minute. There we go. That should be 3 minute. There we are. And that's 5 minute. There we are. And I'll explain what I'm doing here a little bit later once I pass back to Anna. But essentially what I've got set up here is the top line and the bottom line mirror one another in the sense of the price action and time frame for this stock. But on the bottom line, I've added one of the new indicators that we've recently launched, which is the volume relative strength indicator, which is a companion indicator to volume, because it is looking at volume through a different perspective. It is looking at volume through the perspective of relativity and how strong that volume is in the trend. So it's very much about the momentum that is being injected into a trend. And I'll talk through that indicator in a little bit more detail. shortly. But if we just hop back onto, let's pull up this one, which is the 5-minute time frame. There we go. Just move that over a little bit. Move that box out of the way. There we go. Okay. This is basically the price action for the NQ. And what we're seeing here is a classic price waterfall. I wouldn't say any trading is straightforward, but it is one of those days, and we've had several of these over the last, certainly over the last week at any rate, Thursday and Friday last week, again, very typical of this, where we see a nice price waterfall. Where you get into such trends is really a personal choice. What I always look for, and just to put you in the context of where we are in the UK. 14:30 here is for us the open of the US session at 9:30 US time. What we always see first up is a huge surge in volume. It's what we expect. And that is always coupled with huge volatility. We see a lot of whipsaw price action in the first hour or so. This is very typical. It's not unusual. It's very common. It starts with the market makers and injecting the volume in at the start. Lots of volatility to draw traders into weak positions, reversals. This volatility indicator, this little arrow top and bottom, is our volatility indicator, which is immensely powerful, and it is very simple in the way it works. It works on average true range. So what the price action is telling you, and this triggers in real time. Now, on a fast chart such as this, it's not going to make a huge amount of difference. But you imagine if it was triggered on an hourly chart or even a daily chart, it triggers in real time. In other words, as soon as the price action has moved outside of the average true range, the indicator will fire. And the reason it's important is because it's telling you one of two things. It's telling you three things, actually. First of all, the price has moved outside the average true range over the range that it's looking at. Secondly, it's telling you that there is a volatile move and therefore to expect one of two outcomes, either congestion or potentially a reversal. And that's what it's telling you the whole time. It's all about congestions and reversals. And once we've had one of these candles trigger, the ideal is to look at the low and the high of the candle itself, set those levels, and then wait and be patient until the price action has moved beyond that and away from that area of volatility and either through the top or out through the bottom. And what I'm looking for constantly, particularly on days like this, is I'm setting levels. I'm looking for levels, congestion levels. We have it here very neatly defined. We've got the ceiling of resistance here, and we've got the floor of support around about this sort of level. And that's our channel. And all that's required at that point is patience. There's nothing else. It's just being patient and waiting for the market to give us a direction and give us a trend and give us an idea of where we're heading. As we're moving through here, I don't know whether we're going to the upside or the downside. It's just a question of being patient. Then the market breaks. It breaks on volatility in this case. And again, it's another a volatility trigger. What do we expect? Congestion or reversal. So it's no surprise to see we get a reversal. But the key thing on the reversal here that you see is the market is moving higher. Now, is this a reversal of trend? In other words, we've come down here, and are we going to reverse and go all the way back up and maybe higher? And for that, we look at the volume. And if you look at the volume down here, what's the volume telling us? Well, the volume, the green volume bars here, they're declining. So we have an anomaly in volume price analysis. We have price, which is rising, and we've got volume, which is falling. If this were a genuine reversal in what we call, if we call this our primary trend, and we're going to see a primary trend reversal into the upside, then what we would expect to see is volume rising. And in fact, volume is going in the other direction. And therefore, it's telling us very clearly not to worry. If we got into this trade and we see this type of price action, it gives us confidence to hold. Why? Because it's telling us very clearly that the upside bullish momentum is not strong. In fact, it's falling, it's weak. The market makers are not participating, and therefore we can expect a continuation of the trend, which is what we see as we move all the way down. Now, there's something else about these candles in here which is interesting. If we look at this one, for example, where my cursor is, you look at the volume associated with that one, and you scroll 4 candles back and you look at the volume associated with this one. And this looks anomalous. Why does it look anomalous? Well, because the spread of the candle here is much wider than the spread of the candle here, and yet the volume is lower. So this again just confirms to us that this is not going to go very far. This is simply a weak rally, and you will see these in all time frames. And what this is about is the market makers who manage these markets. If you think about it logically, we've got a lot of selling coming in here, and the market makers, their business is about making a market. They see both sides of the market, and their remit is they have to make a market, and therefore any selling that comes onto the market, they have to absorb it. They can't say, no, I don't want to buy. If you want to sell, they have to buy. It's as simple as that. So whatever selling is going on, they are buying that stock as it comes on the market. But every campaign they develop will always have phases here, because this is where they are pushing the price back up. They are drawing traders in, thinking that the bottom is in, and they are also selling into weakness. They are getting rid of stock that they've had to accumulate in this downtrend, and they're pushing it back into the market before we then take the next leg down, and on down we go. And eventually we come all the way down here, right the way down to the bottom. In terms of getting into positions, if you maybe felt uncomfortable about getting in at this sort of level, okay, or maybe you wait and you saw this occur, and then you see this, you think, well, I'm not comfortable with that. Maybe it's going to reverse again. Okay, well, you'd set your levels on this candle. Are we going to break to the upside? That will be our level to the upside. This is our level to the downside. Once we've broken through to the downside, are we comfortable getting in there? For sure. Off we go. We've got nice volume, confirming that. Again, the reaction here on the 2 little green candles in this sort of mini congestion phase, volume has fallen on the 2, so it doesn't look particularly strong. In addition to that, if you look at these 2 candles here, where are the wicks? The wicks are to the upside. So what is that telling us? Well, it's telling us generally that the market's trying to rally and is falling back. It's trying to rally and falling back. Hardly a sign of strength. Similarly up here, market's trying to rally and falls back. Doesn't look particularly strong. So again, when you're looking at volume price analysis, there are many, many different moving parts. You're looking at the spread of the candle. In other words, the width of the candle. Is it a wide body? Is it a narrow body? You are looking at the wick. Is the wick or are the wicks predominantly to the upside in a move? Are the wicks predominantly to the downside in a move? What are they telling you? Are they large wicks? Are they small wicks? You're constantly comparing, and then you're looking at benchmarking candles as we're moving up and down, as we did here. We looked at these 2 candles, which are in close proximity, to try and give us an insight into whether the volume associated with a piece of price or with a price candle is genuine, or is it anomalous? And really, that's what volume price analysis is all about. It's about constant comparison. And of course, we're doing this across all the various time frames. That was on the 5-minute. I mean, we can go right up here onto the 30-second, which is a very fast chart. I like to trade these charts, but they're not for everyone. But what I would say is if volume price analysis is a new methodology to you, this is a great way to learn, to hone your skills, to go to a fast chart. TradingView has also got replay up here, which is also very useful. You can use this replay function to scroll right the way back to some price action and just read it off bar by bar. When Anna and I started doing this 25 years ago, if not longer, the internet wasn't around. We had screens the size of, I don't know, they were huge. They're absolutely monster. We had a satellite on the house. We had, there was no broadband, there was no internet. And we had to place orders by phone. And practicing VPA, we did with manual charts, just reading charts, just hiding the price action and just scrolling across manually. Now you have all these tools and wonderful tools available to practice. So if it's something that's new to you, I would urge you to use either the replay function up there or to simply go onto a fast chart like this and just read it bar by bar and interpret what the price action is telling you. And just to go right up to the live edge of the market, these last 4 candles, what have we got here? That's not telling us a huge great deal. Volume, we've got tiny volume on that last one. Is volume and price an agreement there? Yes, but it's fallen away from the last one. So it hardly looks terribly strong. It's not a rally that's as strong as this one, for example, where you look at the volume associated with it, and you've got good volume under that rally. So in that move, yes, there are perhaps signs of weakness coming into it as we move up. For example, on this candle, halfway up the rally, we've got decent volume under there, and yet we've got quite a big wick to the upper body. So it's an initial signal that perhaps this rally is not going to go very far. Perhaps it's looking a little bit weak. It carries on for a little bit further, then we move into the congestion phase. This, on the other hand, we've got very narrow spreads on the candle. The volume is mediocre and it's kind of falling away. So it hardly looks like a strong reversal is taking shape here. But of course, we're coming towards the end of the session as well. And therefore, things are likely to quieten down. We're going to see volatility come back in again. We're going to see volume surges here, there, and everywhere as orders are closed out, as 0DT options are closed out, the monumental volumes flowing through there in the last half hour as those contracts expire or are closed out. So I'm just going to pause there and I'm going to stop sharing my screen and I'll pass back to Anna. I am mute. Yeah.
Okay, let's go back to my screen. And David had the NQ, he had the futures. I actually have the NDX, the Nasdaq, and I've got the three charts up here. I'm going to start with the daily. I've got a few more indicators on there that David has, simply because I want it for the purposes of support and resistance. And in fact, I did a little post on this daily chart for the NDX yesterday, which you can find, as I said, on my Twitter feed, because this has been, as we can see, it's been in this a down move since the 11th of July. And if we think back to the 11th of July, it's almost 4 weeks ago now. The Nasdaq really, the tech sell-off that we've seen certainly accelerated since last week with the Bank of Japan and the very poor employment numbers, actually started back then, and it was led by the tech. And if we look at the daily chart, what do we see? Well, in terms of candles and patterns, we have this very big bearish engulfing candle. Now, the bearish engulfing candle is a very strong candle. It's one where there's a very high probability that it will actually play out. It was accompanied, as we can see down here, with a reasonable amount of volume. What I've done on my volume, this is just the standard volume from TradingView. I've actually put a moving average on. It's a 20-period moving average. And it just gives me a quick visual onto as to whether the volume I'm looking at is well below average, average, slightly above average. It did also trigger the volatility candle because it was outside the average true range for this particular time frame. So that in itself was going to tell us that not only was it a bearish engulfing candle, which, as I said, as a candle pattern, has a good probability of playing out, that there is weakness. Whether that turns into a full-blown instant reversal, that we don't know. But with the trigger of the volatility candle, what we can say, based on how David has explained it, is we can at least expect a retrace to within the spread of the candle, and then it's a case of them being patient to see whether, in fact, this does turn into a move lower, which it actually did. And this is what I meant, what I explained to you about looking at the daily chart to try and get a feel for what kind of market environment do we expect in the session ahead, in the day ahead. Are we certainly before the bearish engulfing candle, and you look before that, well, you would see that in fact we were in an uptrend, a very clear uptrend. We've got 1, 2, 3, 4, 5, we've got six candles going up. But what's interesting with the volume is that while the price was rising, it was actually going down. The volume really wasn't all that impressive, in the sense that, this is a reasonably busy time of the year. So there was always a sense that there was a degree of weakness maybe coming in. And then you have this trigger. What's also interesting is when we talk about with VPA, we also look at the spread of the candle in relation relative to the volume itself. Well, the spread is narrowing there, but you've got the same amount of volume under that candle, which is a narrow candle, as you have under that candle, which is practically double the size. And this is where this is a really good example of Wyckoff's third law of effort and result. There is effort going in terms of volume, but you're not getting a lot of result. They're all little red flags, if you like, that put you on alert. We don't know at the time, the day before the bearish engulfing, you would have seen that. Maybe you would have said, you know what, this is really not looking terribly strong, as it were. I can't remember at this moment in time what happened on the 11th of July. It may have been a CPI. It may have been a piece of news that then triggered, if you like, was the catalyst, so-called catalyst for the bearish engulfing candle. But seeing that on the chart and then just checking the news and saying, is there something coming up that is going to, if you like, be an excuse? The thing with news, be it fundamental news, geopolitical news, it is a perfect excuse for reversing markets. If you like, the two pieces of news we had last week one was the BOJ, one was the employment data. That combination, it was like that was it. They couldn't, those were the two, combining them together was a great excuse for driving this. You see the huge gap down. I know we've had a relief rally yesterday and today, and I'm going to come to that in a moment. But I just wanted you to perhaps start thinking about the daily charts, even if you are on the faster timeframes, to get a feel for the structure of the chart. Some people call it market structure. I call it chart structure. We were in an uptrend, and then this happened. We know the volatility, when that is triggered, it goes into the spread of the candle, patience. And in fact, we've had volatility. It's been it's been volatility all the way down. And then you have these attempts to rally all the time. Another example, you've got a volume going in, a very small candle. Yeah, its price has been supported, but effort and result. Very, very simple. What kind of effort is going in? Are you seeing the result that you would expect from that kind of effort? No, you haven't. Then we've gone into a congestion. We've got another volatility candle. And in fact, we've now gone through. Now, the important thing here is these support and resistance lines that we have here. This is what we call the accumulation and distribution indicator. What happens is these levels, the indicator pulls them up, and basically the more times the level is tested, these lines get thicker and thicker, and they get stronger. Now, what happened Monday and Tuesday is Friday was the NFP. Monday, we had this big fall. It fell below these very, very strong levels, and then it reversed higher. Buyers came in, and you say, well, why did buyers come in? Because this has been falling since July the 11th. The feeling is general feeling is that a market doesn't want to fall. It wants to, this is a correction. This is not a major catastrophe. This is not a major crash. So there will be levels that investors will be looking at, traders will be looking at, and they will be looking to buy the dip. Now, this was a very significant dip, but it's also, I've put them in manually, these levels. If we look over to the left of the chart, we have this level here from where the Nasdaq has gone higher. So that is a logical point, a logical buying point. And we've had some earnings. There's all sorts of other reasons. From a technical point of view, it's not surprising to see what we call a relief rally. That was on Monday. It was carried on Tuesday as well. Interestingly, look at the volume, but, and this is the very big but, look at the candle that resulted. First of all, there was another volatility trigger because it was outside the average true rate. And look at where the wick is. You had quite a deep wick to the top of that candle, and you hit these two levels here, which are very, very strong. Yesterday, you had the same thing. Market went up, it went into these levels, not quite as much volume as Monday, but a reasonable amount. It's certainly above average. Again, a wick to the top of the candle. And this is what I said yesterday in the little note that I put on my Twitter feed. That looks, people who don't use, traders who don't look at candle wicks, who don't use VPA would say, great, there's been, and the headlines in the media would say, oh, markets, ended higher, great, giving the impression that that everything's okay. It's, there's nothing wrong. It's yeah, we've had a bit of a wobble, but that wobble is over. But what I actually said was, you've gone straight into until you clear these levels here, which we can see are very, very strong. These are the blue and the red. As we say, you have ceilings turn into, floors turn into ceilings, ceilings turn into floors. And that is your ceiling. It's a very strong ceiling of resistance. And in fact, this morning, if you look at what happened and we look at that candle, it did actually go higher. It did go through these levels, and people were saying, fine, fantastic, it's going higher. But it doesn't, it looks like it's going to end up as a down day. Now, what's interesting is what the volume is going to end up at the end of today, because just as you need volume on going up, you also need volume going down to confirm the price action. But this is from yesterday. As I said, you have these two candles with wicks to the tops of the candle, and the other question is, well, if it fails here, where's it going to pause? Where's it going to? Because that's the next question we want. And this is where support and resistance comes in. I just use simple lines. Some people use trend lines. Some people use moving averages. You can use Fibonacci. I've also have a Camarilla levels that I look at as well. It's really very much up to you. But whatever you overlay onto your chart, the key is the price action and the volume. That comes first. And that's something that we work very, very closely with our coaching students. Some of you may know already, we do take on students on a purely one-to-one. We don't do classes, we do one-to-one, so we can dedicate the time to individuals, and that's myself and David. So you actually get two for the price of one, if you like. We both do it. And this is where we start. We start with a really strong understanding, a deep understanding of the mechanics of volume price analysis, and then we will gradually move on to what we call we call the volume price analysis indicators, because they are there to help us with our decision making, and also help us certainly with the accumulation and distribution indicator, is to give us a view as to the strength of the levels that we are the levels that we're seeing at the moment. I mean, with Fibonacci, for example, we know the levels which are stronger, in the sense that market will respect them perhaps more than others. Okay, so that's the daily chart. This is where we are at the moment. So waiting to see how the volume plays out today. But that's the reason why there hasn't been a follow through in today's price action, simply because it's such a strong level. And the two candles, the Monday and Tuesday candle, had these deep wicks to the top of the candle. Yeah, the market recovered, but it wasn't enough to move them. Now, the final thing about support and resistance is when price action is at these very important levels, be it on Fibonacci or Camarilla or just strength, you are going to need you're going to need extra volume. You're going to need a volume boost, if you like, because of the strength of those levels. And the blue lines that I put on here, as I said, the first one is actually, there is a level on the weekly chart, which is kind of, it's not strong, but it's there. And it actually, Monday, kind of bounced very close to it. And then that's the level to the downside. If we move over here, if it's going to go lower, then it's certainly got a very good chance of testing right the way down to 17,000, just over 17,000. So that's the daily chart. That's the sort of conversation you need to have with yourself on the daily. And then this is what I said about the hourly. Now, the reason I have the hourly and I have the Camarilla is because the Camarilla calculates in a slightly different way, the way we use it. The hourly levels are there for the week. They're recalculated every week. So they're sort of weekly levels. And this is where it's, if its heads lower, it will certainly find the support down here at 17.7. But at the moment, it's really oscillating between 18,333, which is just below that very strong support on the daily chart. This is where it's come off. And it's just gone below the S3. The third and the fourth are the most important levels of the Camarilla protocol, if you like. So we'll see what happens, whether that's going to go down back there or it's going to go back and test back over here at just over 18,000. And just to round off, to get back on the 5-minute chart, very similar to, because this is going to be distorted by, that's it. By the volume coming in at the open. David has really talked you through the 5-minute chart that we have on the futures, very, very similar to what we see here on the 5-minute of the NDX. I've taken everything away. I've actually kept the pivots on there more by accident, but again, it's with the volatility and really looking at the relationship between the candles, the volume? Is it rising? Is it falling? You know, where is this market going? And certainly with the failure to break at the open, let's take that, just draw a line over there. Really, how many times was that? This is the opening range. How many times have we had us fail there? You've got wicks to the tops of the candles. You've got here, you've got a lot of volume going into that candle, but really not effort. You've got effort and result. That gives you a something, you know, not a benchmark, but you've got a level to work out. This is if you don't have a specific indicator, just do it manually. Just put the levels on and see what's happened. Here we have again lack of effort, you know, some effort going in with no result. This is a really good example. You've got a nice candle going high. You've actually got higher volume of that one, but look at the spread on that. That volume has not managed to move that price action higher, and you've got the resistance coming up here as well. So a bit of sideways, and then finally the market broke here at that point there. A congestion phase. What does the congestion phase tell you? You look at the candles, you look at the volume. Is it likely to move to the upside? Is it likely to move to the downside? The clues are there if you know how to read the price action and the volume. And then we go low. And then once you're in, that's when, as David was explaining, the trend starts. It is a break. And every time you have a pullback, you have what is it a pullback? Is it a correction? Or is it going to be a reversal? That's where the volume price analysis really, really comes into its own, because we can see here, you have this pullback, it's on falling volume. There's effort going in there, very narrow spread. It's not going anywhere. And then actually volatility gives momentum. It gives momentum to a move. And that is and that's where traders can get trapped, because they see momentum, they see volatility, and they, oh, right, that's it. Now it's time to, now it's time. But it can also shake you out of the market. And to stay in the market is to look at these pullbacks, look at these corrections, read it with what's happening with the volume. And if you've missed it for whatever reason, the high and the low of the volatility candle, that is another marker for you. That is, you say, right, you draw another thing, right, once it goes below there, have I got an opportunity to get in? And the chances are, because once the volatility dies down, you then have a very steady move down with rising volume. You know, there's nothing frightening there. There's nothing scary. This. I'm on the 5-minute chart. David, as I said, he'll use the 30-second chart and the 1 minute. He loves his fast charts. But the 5-minute chart is absolutely brilliant, and it's just more measured. And then what you do is look at I go out as far as the hourly. I look and I think, where's this likely to pause? Where is my next pause point in terms of support and resistance? And if I find a significant level on a higher time frame, that is, I have to take note of that and think, yeah, it's maybe going to struggle. And you can use the higher time frames to basically as objectives. You think, yeah, this is where I think it's going to go, and this is where I think it's going to stop. Maybe that's where my exit is going to be. And staying in the trade, you go back to the faster time frames, and you use your understanding of volume price analysis to help you stay in the trade. No, that's all I've got to say. Is there anything you've got to say, or is that it? Are there any questions? Does anyone want to have a look? Have you?
Yep.
Oh, brilliant. And does anyone want to see anything or not?
No, I think that's it.
That's fine. Right. I think we'll stop at this point, because, as I said, this is our first effort. Hopefully you've enjoyed it. We will become a little bit more polished than we've been on this session. If you've been following the YouTube channel, you will know that we've been uploading some very different videos with no narration, just music and annotation, very short, to help you with your understanding of VPA. The one that's going up tonight, I think, is on AMD.
Yes.
Yeah, the one we're doing tonight is on AMD. If you want us to have a look at anything in particular for the next one, we will give more notice for when we do the next one. Just drop me a message either on my email, anna@annacooling.com, or you can drop me a message on Twitter. So I think that's all I've got to say. Anything else?
Just special discount on the indicators.
Yes, I almost forgot. Yes, at the moment, we are having a summer promo on our indicators and also on our educational programs. That's the Forex program and the stock program. What's the discount at the moment?
35%.
It's 35%, just a straight 35% of everything. So if you are interested in any of the indicators, or certainly interested in the education, that is self-directed education. That's not the personalized coaching. For that, if you go to my site, annacooling.com, at annacooling.com, what it is, we'll happily take a 30-minute call with you. If it's not us, it'll be one of our team, and they can talk you through what the coaching and mentoring program involves, basically. So if that's something that you're interested in, as I said, just if you fill in the contact form there, somebody will contact you. So what can I say? Thank you so much for taking the time to come along. I hope you found this useful. As I said, we will become a little bit more polished, and we get used to the technology. We've used Zoom on this occasion. Maybe we'll use something else. I'm not sure. David, is there anything else you want to add to that? No. As I said, enjoy the rest of the trading week. All I can say to you, things are going to be heating up in terms of volatility, certainly between now and the election come November, and even the summer. Usually August is a very quiet time for the markets, but I think there's so much going on at the moment with the Fed and the Bank of Japan, and I could I give you a laundry list of things that are going on, and that's without the geopolitical stuff. So great trading opportunities, and I hope you do use VPA, and it's certainly a methodology that I'm delighted to say so many traders have found has made them really, really successful. So enjoy the rest of your day if you're in another part of the world where you still got the rest of your day, and if you're in the UK, enjoy your evening, and we will catch up with you next time. Thank you, and thank you so much for coming along.